Okay, so here is a question 51. Selorne company in your exam kit. Please come to the question 51. Read the requirements and the scenario once. Then I will start discussing and solving it. Be quick, please. Let us solve it now. What they are saying, the requirement is estimate the equity value of combined company and expected additional value arising from combination of this and this. Okay. Estimate the share of gain from the combination created for Chris Shavon and share of gain created for Salord and comment on your result. Evaluate how reliable the estimates of synergies for the combined companies are likely to be. One. Second, and discuss the factor which may prevent the forecast synergies from being achieved. 8 marks. 5 marks are professional. Okay, don't worry, we will talk about it. So I'm opening the Excel sheet. Now, Selorne company is one of the biggest removal company in Poland. It has a number of. Can you hear me clearly? My voice is clear. Tell me. Okay. Now, Selorne is a listed on. Okay, it has large number of long-term contracts with the large businesses, although it has not won any new major contracts in the last 2 years. Selorne company is listed on Poland stock market. For smaller companies, Selorne company is financed by a mixture of equity and short and long-term debt, but gearing level is below the average for its sector. Selorne has 4 executive directors who each own 20% of the company's share capital, and with the other 20% owned by the external shareholders. Selorne has paid a constant dividend since it has been listed. Okay. And it has share price has risen slightly over the last 3 years. Selorne company is based in a number of larger city and towns in Poland and own the majority of sites where it is located. Now you see here, these are the some strengths being discussed. Many of its employees have worked for the company for a long time. Driver used by are required to have a special heavy vehicle license. Salary levels at the Selorne are relatively highly compared with the other company in the sector. Now, this is the synergies or problems which may not. So these may be the source of synergy. This may be this culture, this way of working may become a hurdle as well. Okay, now next. Selorne Company is currently considering making a bid for Chavon Company, an unlisted company specializing in distribution and delivery services. Chavon Company is owned 100% by its founder, Chris Chavon. Chavon has built up a portfolio of small contracts over time. It has made unsuccessful bids for two larger contracts over last 12 months. The bids being rejected primarily because Chavon Company was not felt to be big enough to be able to guarantee the level of services required. Now, Chavon Company is based in many of the same cities and towns where Selorne is located. Although Chavon Company premises are all rent, now you see here, it is small, not being able to win guarantee. You know, when they become big, this they will be able to get these contracts. Two companies, when they combine, second, and they will be able to get big contracts. Yeah, based in many of the same cities and towns, all are rented. When they combine, this rent will okay because Selorne Company has owned buildings, own sites. You see here, the drivers of Chavon Company vehicle does not require a heavy vehicle license. But here is a problem. Here they have license. Most of driver staff stay at short time. They are longer time, highly paid. Okay, now salary levels are low. They pay high level of overtime. Company is highly geared. Financial viability alone, it is highly geared. When they combine, it may be different. Now, keep the first requirement in your mind. A part, yes. And it is the A part, the first requirement is equity value of combined company, first of all, and expected additional value when you combine both. Students, combined company and additional value. In an initial discussion about the acquisition, Chris Chavon indicated that he would prefer the consideration to be share for share exchange. The terms being one Chavon share for 5 Selorne shares. Yes. Selorne will issue 5 shares for 1 share of Chavon. So, for 1 share of Chavon. Now, this is the bet. Chavon has 1 million share in issues. So, what I will write here, Selorne data company and Chavon company. Chavon have 2 million shares. Number of shares? 2 million. $1 each. Selorne has 50 million. Sorry, this Chavon. Sorry, it is inverse. Yes, Selorne company has 50 million shares. 50 million shares. $0.5 each. It is basically face value. It is face value given. Each Selorne company is trading at 6.5. Market value of Selorne company share, $6.5 each. 6.5. Now, then they say, which is multiple of 8 of free cash flows to equity. Remember price to cash flow ratio. Price to cash flow ratio or cash flow multiple earning. Remember, this is what we discussed at the end of last lecture. So it is 8 free cash flow to equity. 8 times. Multiple of 8 can be assumed to remain unchanged if equity, yes, combined company. Now you will see the magic. They say this multiple will remain the same when the both companies are combined. Shavon Company's free cash flow to equity is currently estimated at here. Free cash flow. This to student, this segregation of data is first thing. That you proceed with a structured approach. Such a mixing of data is there that you get confused if you do not segregate it. 7 million. Expected annual growth of 3%. Okay. Annual growth. 3% annual growth. Cost of equity of Shavon Company. What is it? 15%. Students, now. Next. You see here, we can calculate market value of equity. So market value of equity of Selorne Company. Currently, how many? These are the number of shares. Okay, into market value per share. Market value per share. You see here. And here market value of Shavon Company. Equity of Shavon Company. How to calculate? It is free cash flow to equity. Growth rate is given. Cost of equity is current free cash flow is given. This is current year. So perpetuity with growth. This into 1 plus growth rate, 3%, divided by 15% cost of equity minus G. It is the first cash flow in the first year of perpetuity, next year, and divided by cost of equity minus growth rate. This is the market value of equity of Shavon Company currently. It is the market value of equity of, yeah. Now, we have current free cash flows here. Now, you see here, the story should be clear. Can we find the free cash flows to equity of Selorne Company? Can we find? Price to cash flow is given. Price to cash flow ratio, that is equal to 8. Here, we need cash flows. So that will become price over price, market value of equity over 8. Cash flow will go other side. Is that clear to everyone? Is that clear to everyone? This will become free cash flow to equity. Any confusion? Anyone? Any point you want me to re-explain? So we calculated free cash flow to equity. How? Just rearranging this formula. Simple is that. Now, cash flows of combined company. They say that there is Shavon expects that free cash flow combined company will increase by 5 million. And these are the reasons. Now, so you see here, means individual cash flows, individual cash flows plus 5 million. Just see here, this is combined company. Yes. So same formula, price to cash flow is equal to 8. We need price now. So price market value of combined company. Just see 8 into cash flows. 8 into cash flow will multiply the other side. This is the market value of combined company. Yes. Market value of equity. Any step which is not clear, ask me, please. I will explain. Tell me. Any issue which is not clear before I proceed. Is it clear, students? Tell me, please. Welcome. So the first part is done. Now additional value. Second part. Additional value arising. Combined company value minus individual companies' values. What was the individual values? This is the additional value created. Now, sometime examiner asks a question Give you all the detail and they say, calculate how much premium Selorne can offer, how much premium to Chavon company maximum. This is the maximum premium they can give. This amount. Okay. This is the maximum premium which can be offered. Next. The next point is second part. Estimate the share of the gain from combination. Credit for Chris and for the Selorne. Okay. Come here. Share of gain. How to calculate now? So you see here, second part. They have offered now. Students, how many shares in the combined company? 1 for 5. So, number of shares Chavon company will get in combined company. They have total number of shares 2 million. 2 million. And they will get 5 share for each. 5 share for each. 5 share for 1 share of Chavon. Number of shares they will get. Yes. Now, focus everyone. Now, the point is, we have to calculate. The next point is number of shares of combined company in total. This additional plus existing shares. Total number of shares. Existing shares plus additional issued. This will be issued. So, value per share. We have calculated market value of combined company divided by number of shares. Value per share is here. Value per share. Here you go. So value that will be value of Chavon company shares in combined company. This is number of shares. They will get per share this. Try to understand the logical point of view. Don't try to just copy paste. Try to understand the logic as well. Here you are. Next. So what is the gain for Chavon company shareholders? This is the new value. And what was the value before individual this? This is the gain for them. New value minus old value. Now gain for Selorne company shareholders. How much? Total gain? This is total gain. Minus gain for Chavon. This is the gain for remaining gain is for them. Any calculation you want to see again, understand again, please let me know before I proceed. And tell me, is it clear? This calculation, here it is. Total gain, additional value created, less gain given to the Shamon. Other people are on silent mode. Is it clear? Tell me, please. Good. Now, let us proceed further. So the next point is comment on it. And they said comment on it. Now, the point is they are unsure whether Shavon company will shareholders will get this or not. So what is the gain? So percentage gain for Shavon company shareholders. You can calculate percentage gain. This is gain. Gain is over this amount. You see here. Yes. Gain divided by the value the previously they had. 68.8%. So this is a reasonable gain. Okay. Now, so, and what about so the shareholders of Shavon company will get 16.8% over and above its current market value. current market value of shares. And given the circumstances of Shavon Company, that it is already highly geared and media speculations are being made about its viability, financial viability. I have not taken anything from my side. Everything is in ability. So they are likely to take this offer from Selorne Company and tell them shared. Now, comment on it. We have done that as well. Now, students, evaluate how reliable the estimates of synergies for combined companies are likely to be. Why students don't get marks in theoretical part in AFM? Because they just want to copy paste from notes. Whatever they don't link it to the scenario. They don't evaluate the scenario. So when you do not do that, you won't get marks. So we will talk about reliability of synergy estimates. Reliability of synergy estimates. How reliable they are. Now, so what they are saying, here they are saying, will be able to win more contracts. The first thing. Now, so the synergy gains depend upon winning of larger contracts which they have not dealt with before due to smaller size of business. Yeah, as they say that Chris Shawn, yes, as recently in last 12 months, 12 months, Shawn companies lost two contracts and couldn't win the bid due to its due to the fact company was not big enough, and they may have won that if they were combined company before. Yeah, you were combined company before. One. So reliability. Second, yes, both companies are working in same location. Shavon premises are on rent while Selorne owns its premises. Its premises. Right? So cost saving will be there if they leave the rented spaces, and as well as staff duplication will be removed, being both companies staff at same place, which will no longer will be in same numbers as combined company. So cost will be saved. Now, so students, reliability, the working conditions, yeah, the synergy related to working conditions may not be achieved as work environment and practices are different in both companies. In both companies is very difficult. One more thing, it's below average gearing level. Selorne company has gearing level below industry average, while while Shavon company is highly geared. So as a combined company, they may achieve Optimal capital structure, having low, lower average cost of funds. Yes. So 4 points we have told. Enough. Oh, yeah. In companies. Next point. The next point is why synergy may be difficult to be achieved. What will prevent them? Now, why? Students, problems with achieving synergy. Remember, I have not made bullet points. 1 point, discuss completely. Next point, next line, completely. Next point, next line, but no bullet points, no short sentences. Problems with, and students normally do not, you see, I have not written any single thing from notes only. I applied that knowledge to the scenario and I'm writing answer as per that. Problems with the achieving synergy. What may be the problems? Now, so they say that Shavon, if he is given the operational organization, dealing in staff and retention issues, management of company. Yes, he thinks that central at okay, right. So the problem is with the management. The first point is Chris Shavon wants the role of for operational reorganization of combined company. Now, and if he is granted this role, he will use his own management style in the combined company, which may upset the long-serving employees of Selorne company. And they may leave the combined company. So the long term, so the benefit may of synergies may not be realized as important staff of Selorne may leave. One thing. The second is, yeah, the both companies. Selorne company, employees are highly paid. Highly paid. You see here, we said that. highly paid as compared to other companies in the same business sector. While, yeah, if in the combined company, their remuneration packages are like Chevron company employees, upset them. Yeah, it may upset them. And may leave the company. Yes. Yeah. Chavon company employees income would expect higher salaries in combined company as that of Selorne company employees. It will also happen. So, if it is done, employees' cost will go up, leading to reduction in synergies. Yes, it may happen. Now, the last one, the last point. That is the lorries. Here is driver of lorries. They are required to have a license. Yes. So integration of both companies' staff may be difficult, and there occur due to different working practices, and there a culture of them and us may arise, may develop, leading to decreasing the level of synergy to be realized. Yes, here you go. So, student, this is done. Total 6 points are okay. We have written more. Okay, so we have done it. Student, this question is done. Selorne company, I will save it. So the name is Selorne company. It is done. This question.